Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We get the Dow Industrials up 25, NASDAQ up 13, S&P's a flat. Gold contract down at $2.90, trading at $1,212 an ounce. Silver off 24 cents at $17 flat. Platinum down 16 at $1,267 an ounce. Copper off at 2.5 pennies at $3 a pound. Light sweet crude down up 60 cents at 81.33. Had light sweet go to $88 today. Reject lower price, and it's back inside the larger range here. Bonds 10-year down 6 ticks at 125.10. 30-year off 19 at 139 flat. King dollar down 356 ticks, trading out at 85.72. The euro is up 47 at 126, and the yen is trading down 48 at 108.42. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We've hit a low out here today of 1926. We're at 1951. The 1926, by the way, folks, that is basically hitting the highs of the lows of August on the weekly basis. That's what we've done here. The high of the low is 1942. Okay, so when you do something like that, what do you look at? Well, of course, what we're going to look at is we're going to look at the volume characteristic. Bottom line, folks, you're actually down today on monster volume. It is going to be interesting to see inside the NYSE exactly where it comes out, because right now we're already at 541. We take a look at the SPY, the SPY. What you have with the SPY is this. SPY's trading out right now at 194.71. You've gone to 192.35. And looking at this correlation right now, what I expect you're going to see is this. So let's watch how this came out. 194.18 you started out with. You get down to the 192.35. What we had just done the last 10 minutes right before I get on at 14.50 to be exact, you went right back to ICE. Now, bottom line is that as you go back to ICE, sorry about that, folks. As you go back to ICE, you get up there, and we did it with dramatically lighter volume. What that sets up is that you're going to back down. So I suspect as we get into this close here, you got all the indices right now. They've made it green. I expect they're going to be flat, slightly red. What that's going to set up, that's going to set up little dojis, and that's going to be the halfway move down of where we are from the highs out here, 2 weeks ago to where we are right now. S&Ps. We go take a look at the, well, that was the S&Ps. Dow Industrials. We take a look at the Dow Industrials, what we have with the Dow Industrials. Dow Industrials right now up 26 bucks. They hit a low out here today of 16,667, and bottom line, I expect a same deal. It's going to end up somewhat at a flat market. Putting strength inside the Dow Industrials today, you have Nike, that's the largest mover, that's up $1.45. Goldman Sachs is up 262. You get Home Depot up 125, and you get ExxonMobil up 87. Exxon's got absolutely smoked. Taken away from the Dow Industrials, you get Intel, that's the weakest Dow stock. JP Morgan Chase is down 27. Disney is down 66, Walt Disney, and United Technologies is off 38. The NASDAQ composite. We go take a look at the composite. What we have with the composite is this. Composite hits a low out here today of 43.67. That 43.67, look at this, what a trip, man. I love it when these go into the highs of the lows. And that's exactly what it did. So the highs of the lows of the swing point here, this is what the baby did, is 43.95. We hit 43.67. So thus far, what you've done is this. You've rejected lower price. The correlation, when you take this, so what we would do, I'll use the 3 Qs because it'd be easier to do it on the 3 Qs to see what the correlation is right now. And what you're looking for, folks, is that you're looking for the strength and or weakness of the move. Is it into it with higher volume? Is it into it with lower volume? You're into it with lower volume, guess what? That could be a bottom. You're into it with higher volume, it's just building cars to blow it away. So thus far, we've done 178 million shares. We have 1 day left of trading, so that, and we're coming into 195 million. So what we've done is this. you're hitting the swing low with more volume. What that's saying is that, guess what? It's going to go after the swing low, more than likely it's going to bust the swing low. That's on your weekly. We take a look at this and we put this on the daily. What we have on the daily is this. On the daily, same as the S&Ps, daily has just come back up to ice. And you're going to need a lot more juice than this because we have 4.7 million on a 10-minute bar, and it did 1.43 million. That's set up coming into the close that it's going to back off once again. Volatility in spades out here, no doubt about it. Gold contract. We go over to gold. We take a look at gold. What we have with gold is this. Gold's done 139,000 contracts today. Nice number of contracts. Got to a price point of $12.24. Couldn't hold $12.24. Gold has tested the swing low. The first swing low out there was the 1206 area. That was from the 25th of September. We got down on Tuesday to the 1202, and 1204 rather. We hit the 1206 yesterday. The movement today, all of this gold contract really has to do today is basically, well, the pit trading is closed, but what I'd like to see is it only needs a couple dollars. $4 would be great, meaning that it makes up the 270 that it's down right now, makes up a couple more dollars. Then it looks to me that we get some action. It's trying to get into higher price. Now, there's divergence. The divergence is the silver. What you have with silver out here is this. Excuse me. Once silver broke down, and busted all these lows, it's a big problem. Silver is going to need wide price spread, accelerated volume to get back inside of where it broke down from, because this breakdown in silver, bottom line, has to get back inside the $18.15. Now, silver's volatile and can do it. There's no doubt about that, but bottom line, that's $1. That is some big money. Bonds, the ever-ready bond market. So what do we have with bonds? Bonds, look at this, man. This is just amazing. So bonds are down 6 ticks, but we had gone to a high of 125.23. 1.6 million contracts on the 10-year. It's monster, folks, okay? This thing is just a rocket ship. Going a lot higher. The yield right now on the 10-year is at 2.432. We look at the 30-year. Same deal with the 30-year. 30-year bond out here. Traded to 140.01 today. Huge volume again, 435,000 contracts. So big numbers. 30-year also wants much higher price. Oil market. Now this one's going to get wild. So let's look at the oil market. So what you have with oil is this. CLX4. Oil gets down today to 188. CLX. Oil gets down to 188.18. You reject that price. You do have 426,000 contracts, and you're inside the range. So with that being inside the range, you're going to see a bounce in oil. Oil's going to try to bounce up to this $94 again. We'll see whether it can make it or not. It's still in an ABC structure on the way down. It's going to turn into a complex ABC structure. And what a complex ABC is that first you break your swing point, you go lower, reject lower price, get inside the range, and if it is a complex ABC, what you'll see is that, let's say we end here, tomorrow you'll see it start moving higher, but it'll start moving higher once again on lighter volume. But that's what it looks like we have right here. King dollar. Let's go look at King dollar. King dollar looks like it's going to finally take a break. King dollar, what King dollar has done is this. King dollar has backed down today, not a huge amount, 376 ticks, and that's certainly not a lot of ticks in the correlation of where we just came from. What you do have, however, is you get an expansion of volume. So it's very subtle. We've done 51,000 contracts out here today. I suspect the first back down will get us into the 84.80 to 84 flat market, 84.00. That will give the metal complex room to breathe. We'll see whether it can do anything. This is Tom O'Brien. This is TFNN. Deviance in the marketplace. It's a beautiful thing, folks. Dow's up 16. NASDAQ is up 12. S&P's are flat. It's a trader's paradise, folks. Volatility in spades. You stay right there. We're coming right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now are up 11. You get the NASDAQ up 9. S&P's flat. And if we go over to the S&P's right now and we take a look at them, as we're coming into this closeout here, what you're going to see, and these are classics, folks, when the market rolls, and bottom line is that you start bouncing off these numbers, specifically meaning that, you know, what ICE is, where the high volume bars are, and bottom line is that what I expect you're going to see here is, as I said a little bit earlier, that you're going to get into a flat market, and that flat market more than likely. Okay, so right now you get it's flat on the S&P, and we just did, so it's 50,000 contracts at the on the counter trend bounce. We did 51 on the way down. Yeah, this is setting up. Okay, this is cool. So we're down 1.5 right now. This is setting up, though, that we're at 1939. It can get to like 1932 in a heartbeat. You know, this is the deviance of markets. Trader's paradise, no doubt. Now, folks, let's go over to our man, Mr. Andy Hecht. And don't forget, folks, every trading day at TFNN, we start programming at 8 o'clock in the morning, live programming, live from 8 o'clock until 6 p.m. Get all that programming right on your cell phone, tfnn.mobi. If you'd like to get Tiger TV, you just go to tfnn.com. You'll see the Tiger TV going in the right-hand corner. You hit that Tiger TV. You're going to get the audio. You're going to get the video. And don't forget, folks, if you are in the Nadex trading contest, we're giving away $10,000 this week. Bottom line, trade. Why? Because each and every day that you are trading, you get in the random drawing for the 5 separate $100 cash prizes. Now, let's go over to our man, Mr. Andy Hecht. Andy, what's going on? And don't forget, folks, Andy has a show right after me every Tuesday and Thursday, 6 to 7 Eastern Standard Time. Outstanding show. What's happening, brother?
So, lots of volatility, huh? You said it right. Trader's paradise.
It's where it's at, man. It's, you know.
It is. And, you know,
and we haven't had this in so long.
Yeah, I know.
Oh, man.
But it's... You got, whether it's equities or commodities or anything, you have to keep your eyes open for those fundamental diamonds out there. We were able to book in 2 weeks a 15% profit in the Technimental Commodity Report today on a coffee ETN that we bought. And you know,
nice.
You know, I'm bearish in general on the commodity markets, and they're not looking great. Now, I'll get to that in a minute.
Yeah.
But, you know, there are those commodities that have strong fundamentals, and when they get pushed down, you know, they're raging buys. So, you know, there are, just like in the equity markets, there are some equities that are very strong out there, you know, strong businesses, and they should be bought. So, you know, this is the great opportunity, these kinds of markets.
There's no doubt.
No doubt about that.
There's no doubt if you're a trader. I don't know if you're an investor, right. It's a great opportunity. But
well, I know. As an investor, it's a tough one.
Anyway, as an investor, you know, the bottom line, folks, is you're an investor, good. Put a couple stops in, hang around for 3 or 4 months, and try to get as close to the bottom as you can when everyone is screaming and crying and thinks that, you know, the whole world is going to end. Because the world's not going to end, folks, you know.
Well, Tom, you know I talk bearish on gold all the time. I'm going to give you something bullish today.
Oh boy!
Here you go.
Miracles do happen.
Before you came on, I was watching CNBC. I was watching CNBC, and they had a guy on there, Ned Davis, who said that gold is going to 660. We see a couple more of those guys, I might change my tune.
Listen to this. This is if you want to hear something that's really wild, right? The last 2 times that CNBC called me, right? And this happens, folks, but just so you understand, it's really, I don't know if it's biased or not biased, but the bottom line is that because I was bullish, the bottom line, it wasn't going to work. So that's the way it goes, man. Do you know what I mean? It's like, you know, it's like, oh, you're going to be kidding me, man. It's just funny.
That's the way it goes. So listen, I spent the last...
And by the way, what they had said at that point, folks, is that they said that they had someone that was bullish. But I watched the segment, and there wasn't someone that was bullish. So who knows, you know.
I spent the last day and a half taking a good look, grinding some numbers, taking a good look at what's going on in these commodity markets. And I wanted to share some of this, you know, info that I have here on this spreadsheet with you and with the listeners. And just to start, overall, from the second quarter to the third quarter, commodity prices were down about, you know, and I'm talking about 6 sectors here. I'm talking about precious metals, base metals, grains, energy, soft commodities, and meats.
Okay.
We were down on a composite basis around 9.45%.
Okay.
The worst performing commodity, soybeans, down 34%. All right, I mean, the grains just got pummeled, no question. And year to date, the beans are down 29%. So, you know, very interesting there. The whole sector down about 19% for the quarter. Now, the best performing commodity for the quarter was up 14%, and that was coffee.
Okay.
Very interesting. And year-to-date coffee, we know coffee roofed last year, up 66% in the quarter, in the year-to-date.
Yeah,
now,
man, it's $2.08, $2.08 wholesale, man. That's huge.
Man, it got up to almost 214 today. Now, the April high was 222.60. I think we're going after that. This crop in Brazil is not good. You have to remember, Brazil last year provided more than, I think it was more than a third, about 37% of all of the coffee beans in the world.
Wow.
So,
that's Juan Carlos.
There's a fundamental reason to like coffee, but you got to be careful with coffee because, as you know, because you've traded it, that is a wild ride.
It is. It's illiquid, really. I know.
Well, it's illiquid, but, when you get on the right side of it, like it traded down 2 weeks ago to like 179. The fundamentals were there. They were trying to push it lower. It kept failing, on the downside below 180. So technically and fundamentally, it was there. So we were able to get on board that. But, look, right up here, I wouldn't suggest buying it. It's hard to buy it after it rallies, 30 cents.
Right.
15%, in 2 weeks, very tough. But I do think eventually we're going to see, a price above 222.60, which was the high we made.
It looks it, man.
High we made after we doubled.
The way that this traded out here today, it has monster volume, man. It come into the swing with volume, so that sets up another 222.
Right. I took profits today because you know what? It's prudent to do so. You can never be wrong taking a profit.
Yeah,
that's how I look at it.
That's a fact, man. That's a fact.
So that was the best on the year, and the best sector on the year.
Yeah.
The meats.
Oh yeah, right. No doubt.
Cattle, another new high today. Moo, right?
Yeah, that's
just moving up.
That is pretty incredible, man. There's no doubt. So you get cattle, folks, on the hoof at 166 a pound, right? That's pretty intense.
Yeah. On the hoof. It's crazy, man. And you know what? We're not even in the season now.
Right. There's no doubt.
So, there's something going on there. This is there's a lot of global demand for beef and that, and so on and so forth.
Hey,
let me go through a couple of these other sectors.
You stay right there, all right?
Sure.
This is Andy Heck, Tom O'Brien. Appreciate you growling and prowling with us out here, folks. Right now, you get the Dow Industrials up 13, Nasdaq is up 10, S&P's a flat, gold at 12.13, silver at $17, platinum 1,266. Andy and I are coming right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You get the Dow Industrials up 2, Nasdaq is up 8, S&Ps are off 2.5. We get our man, Mr. Andy Hecht. We are talking commodities. We get John from New York, Andy. Hey, John, what's going on?
Hi, Tom. Thanks for taking my call.
Sure. Thanks for calling. Thanks for holding.
UGAZ, do you think it's done going down, or is it going to retest the 13-something low, 1335 low?
UGAZ. Okay, so this is Velocity 3 times long natural gas ETN. Down 75 cents right now. I would wait. This has way too much juice today, man. And
let me kick in with some fundamentals. The EIA came out this morning with a report, an injection of 112 BCF. That was a big injection for this time of year. I still like natural gas here, but we're off 7 cents. UGAS is off. UGAS is a reflection of this natural gas future. We can move back down to, the 380 level here. I wouldn't be surprised based on that, fundamental piece of news today. I'm a scale-down buyer of it here. and I'm a scale-up seller between 410 and 430 based on the natural gas futures contract.
Thanks, Andy.
Sure.
So, John, you there? Yeah, so
yes.
the bottom line is that you wait for this thing to see what it does at the bottom. Because
exactly
what you have with this type of vehicle, like Andy is explaining that he can be a buy-down buyer, but he's in the futures market, okay? So what ends up happening is that you're basically scaling down. You do not want to trade a leveraged ETF doing that. That's death. Okay, because it's 3 times. These are daily investment vehicles. Okay, so if you're trying to get the bottom, that's cool. But guess what? It's going to go test the bottom. If it blows the bottom out, it's a monster ABC down. So, okay, man.
Exactly. You want to be there when natural gas is trading around 380, and then put a very tight stop on it there.
Mm-hmm.
Okay, man.
Thank you.
Have a great one, man. Have a safe one.
Thanks. So, Tom.
Yes.
I saw some very interesting things when I did this study, and I won't go through all the numbers, but I want to point out a couple of really, really fascinating things that I came up with. Crack spreads. We talk about crack spreads all the time.
Right.
That's the processing spread of turning crude oil into gasoline and heating oil.
Okay.
You know that these crack spreads, year to date, the gasoline crack's down 35%, and the heating oil crack is down 32%. And that's telling me, and if you look at that overlaid across the XLE and the refining stocks, the stocks of refiners, that is explaining a lot of the stories, because these crack spreads are an indication of earnings for those companies in the business of refining gasoline and heating oil and jet fuel and other things from crude oil. So very interesting.
Yeah, that's amazing. What was really intriguing here, folks, and I'm sure you saw it, Andy. So picture, you have OPEC, folks, and, OPEC normally stays together. But the bottom line is that you had Saudi Arabia price down all their products yesterday to Asia. And their OPEC members are going bonkers right now. And the reason being is that most times what Saudi Arabia has done is they'll pull back their supply and not go down in price. Well, guess what? They've decided, evidently, that they can handle lower price. So.
Yeah, and I would imagine that our U.S. government is influencing them to a certain extent.
Oh, yeah, that's all that because of Russia. Oh, man, that's interesting. Right. No, that makes sense.
The best tool against Putin here is lower oil prices.
Yeah, that's a fact, man. That's so cool. And when I saw this come across the tape earlier today, I said to myself, this is interesting, man. They just priced everything down. You don't see those headlines, folks. That's the bottom line. But the bottom, they priced them down. They priced them down right across the board yesterday. And they priced them down into Asia. That's what they did.
But all of this stuff is very bearish, but for oil. But look, I do think that the oil price has a natural put at around $80 to $85, because
that makes sense.
Below that level, this production in the in the tar sands, in the Permian and the Bakken, it becomes uneconomic, and then we lose our oil independence.
Yeah, no. Well, it was interesting this morning. They're having they're having a conference right now in Russia, and they had one of the ministers on, and it was intriguing. They were asking about the oil, and they were asking about confiscation, and the oil aspect. He says, hey, listen, we're all right with oil, and we think oil's going to stay about the 85 to 90 area. And it was so wild. I mean, we were in a better position than he was, because I was in front of a screen. This is about 6:30 this morning, and I saw oil was starting trading under 90. I said, oh, this is going to be interesting. But then, what he said? This is really wild. He says, we don't see oil at 60, and he says that would be catastrophic.
Exactly. So there's a put. I mean, this is a very managed market.
Yeah. Oh, there's no doubt. There's no
doubt. Yeah. And interestingly enough, also, when oil was cracking down, Dr. Copper was cracking down and cracked through that key psychological level of $3. We're back over it now.
Check this out. Oh, this is so cool. I was thinking of you this morning. Okay, so check this out. This is cool, folks, okay? Inside the commodity. I did the gold report today. We sent that baby out, but watch this. I think copper is just bottomed, and this is why. I'm going to go over to SCCO first. So SCCO, folks, is the largest copper company in the world, the Southern Copper. That's all they do is copper. The clean deal about this is that that's all they do. Huge company. I mean, just monster company. You're talking about, let's see. Yeah, they're taking $6 billion a year, okay? They average $1.6 billion a quarter. Now, when I take a look at this, okay, and you put it up, we put this on a monthly. I mean, this is a stock like every other stock that, no doubt has got killed. The high in this is $49 going back in 2011, and you're trading out at $29. But what it did, and this has to do with the aspect of how many stocks actually go through, folks, inside the metal market in general, okay? And I saw this, and so picture this. When it came down last month, it came down with 40 million shares. But you're going into the bars from 58 million, and it's like, man, this is nice how this is doing it. So,
yeah, hey, you know what? Look at Freeport McMoran as well.
Yeah, but Freeport's toast. And this is why. So watch. We go to Freeport, and this is what the difference is, FCX. The difference with Freeport, folks, is this. Now watch, this is what's really wild. It's rejecting lows out here today, but monster volume. Freeport made a monster mistake, and this is a fundamental deal, but getting in the oil business. They got in the oil business at the highs of oil,
Yeah,
and,
no question.
Freeport right now, you're at 32. I think 26 is game, so it's going to be interesting.
Yeah, no, I don't disagree on the oil basis. But on the copper basis, they have this huge Grasberg mine in Indonesia. Seems like they're going to start producing again.
Listen, there's no doubt they have that, but what they also have is that they have the largest copper mine, they have the largest gold mine in the world. Now what they have, unfortunately, is a huge amount of oil also, okay? And that's basically taking them apart. But now, let's go from that.
Speaking of oil, let me ask you a question here.
Yeah.
Put up Delta Airlines. They got into the refining business. That might be a very interesting stock to look at here.
Yeah, Delta looks to me like it's already topped out. Yeah, you're at 35, wants to go to 24.10.
Yep. And that refining business, as I said, in doing this study, these crack spread prices down 35%. They got into that business at the high.
Yeah, it's weird how that seems to happen quite a bit, doesn't it? It's so crazy.
It certainly does.
Now what's so going to be crazy about Delta, folks? This is what is bizarre, and I think you know this, Andy. So Delta Airlines, folks, had the biggest hedge on of any airline when oil was $16, okay? So what had happened is this. Their contracts were like insanity, how many they had. And you know what they ended up doing, folks, because they needed money? They sold their contracts, Andy, right, at something like 22, 23. The bottom line, they wouldn't have had to do nothing else. Those contracts were out for years, and they would have made billions and billions and billions of dollars, okay? So that kept them alive in their bankruptcy, folks. It put off bankruptcy for a couple of years. Now, just the opposite has happened. It's like, oh, you're going to be kidding me. So they had done the right thing with the hedging aspect. That kept them alive for a few years. If they didn't take off the hedge at all, they would have made just billions. I mean, they wouldn't even have to be in the airline. They wouldn't have been in any business. They would have had so much cash, it would have been insane. But anyway, they did. Now, just the opposite has happened. They turn around and buy the refineries at the top of the market, and guess what? Now, you know what the difference is, though, and this is what's cool about trading, because you can take your cash and run, even if it's a loss, is that now they can't get out of that business. Right?
Oh, no. Once you buy a refinery, man, that is a money pit.
Totally, man. Unreal. Well, listen, folks, you stay right here. I'm coming right back. Andy's going to be with you from 5 to 6 tonight. Andy, thank you so much, man.
Thanks, buddy.
Okay, have a great one. We look forward to the show in another hour and a half. Dow down 10, Nasdaq up 4, S&P's off 3.5. We're going to be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. test drive of the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. You get the Dow up 12, Nasdaq up 11, S&Ps are flat out here. We have American Express is up 19 cents. You get Oxy up 59. Big Blue is flat. You get Walmart up 10 cents. Inside the NDX 100, let's see what the strength is versus the weakness. Inside that NDX, we have Tesla. Tesla is the leader in the NDX 100. That is trading up $10, right? $11 right now. Autodesk is number 2, up 221. You have Mylan Pharmaceutical up 123. Netflix is up $10.81 at 449. Taking juice away from the NDX 100, you have Vipul Communications down 23 cents. AVGO is off 221. You get Garmin down $1.17, and you get Vertex Pharmaceutical down 232. Volume-wise out here, we're going to come in with some juice out here today, folks. So what I expect you're going to have a sideways market out here. Bottom line, that's going to be the halfway move down. Now, what's going to get interesting about that is the S&P, cash S&P went to 1926, which is the highs of the lows. The lows in 1904. The way that's set up is, is that it wants to bust through that baby, and it can bust through it real easy and get down to 1880 on the setup. You know, we've been watching this much larger trend line on the S&Ps themselves, and if you put this up, what we're going to see, you know, because I remember yesterday when we pulled this up, we're going to see that you have a break of the trend, and you have that break of the trend with volume. The first trend that I'll put up here, it just brings you back 6 months, and you're going to be able to see that we have a day left in trading, and you're already broke. You broke it, and you broke it with conviction. So that setup there says the SPY wants to go to 164, and right now you're at 1940. That's a big number, folks. We know the benchmark is that February 5th area, but you get the break, and you get the break in spades too. Now that's the smaller break. We go back and we take a look at this larger break, and you also have the larger break today too, and that larger break is a whole different ballgame. The larger break on the SPY is saying we get a 1340, and we're at 1940. That is intense. But the bottom line is that you do have that break with conviction. Wide price spread, accelerated volume. You're right at the trend right now. It's under the line. It would have to get back inside 195.90. That's how that's set up right now. So that is important to keep your eye on. If we go over to ExxonMobil, what you're going to see with ExxonMobil, you get a dead cat bounce out here today. You're up 47 cents, but see what you have is you have volume once again. You have come into the February 5th level, and now what has happened is that February, the high of the low is $92.21, 31 cents. We hit it today. We hit 92.06. That's what got the baby bouncing a bit. You know, if this doesn't bounce a huge amount, all this is doing is setting up to grind into that swing point, take that swing point out. It'll take a lot to take it out. The reason being is that ExxonMobil had traded at that level from, let's see, from October to 2012, going all the way over to January of 2013. So it traded there a lot. So it's going to have to build some cause in order to get through that level. But bottom line is that you're coming into that level, you're coming into it with juice. That sets up that it wants to go break that level. And, you know, one of our tigers out here today, they were talking about the aspect of the selling today was out of control. And Amen Z. And there's no doubt. And that's what you see in fast markets, folks, okay? You know, that's just how they go. And once they start going, man, they can go. GoPro, GPRO. This is the first day that GoPro basically started giving it up. It's down $5.80 right now. It was down $10 earlier. We'll see whether this can basically get up to those highs once again. The high in GoPro there is 88.53. And no, I have to get our man Dave White on. He's telling me that there's 250 puts on Friday expiration, but I don't know what strike price they have there. But, they're going to be pushing a lot of things around. The GoPro deal, GPRO, is really tough to handle on a short side because of the aspect that you have 41.3% of GoPro shares short. So what ends up happening is that you got to remember something. You always got to buy your shares back even when you're short. Well, when you have 43% of the full float that is short, guess what? That means that you're buying shares versus selling shares, and in that aspect, that can hold stocks up for quite a while. Oh, I see. Cool. What Dave's telling me, and I was bringing this up yesterday, he figures that the deal was they went around the lockup today. And that totally makes sense. I was talking about there's going to be certain folks out there that have enough money that they can turn around, and what ends up happening is if you're restricted on selling your stock, that is one issue. You can't take that stock and then turn around and trade around that stock using that stock as collateral. What you can do, if you have money, is turn around and do a whole nother trade and put a collar on that stock, and that's what they very well might have done. And, that would make sense. What you could do there, you could go borrow money somewhere else, let someone else know what you're going to do, then see what the risk, what the rewards are, and you could absolutely trade it out like that. Which is pretty cool. So we'll see where that whole thing shakes out. But that is this is how this works, folks. If you go far enough out and you have the shares, that is really a smart thing to do, because what you've done is you've sold and you've delivered at a certain price, and if you're happy with that price, guess what? You're done. It's over. Then it's just a timeline as to when the trade will close. But on that side, of course, the term would be saying that you're delta neutral. You're no longer long the stock or short the stock. You have the stock in your hand, you have to put on the other side, you match them up when the deal is, and that's it. It's done. Coming into the close out here, let's see what we have volume-wise. We have right now 666, so that's so funny on the NYSE. If you remember, the 666 was the lows of 2008, folks. NASDAQ, we're at 2 billion. You're going to see them unload some big numbers right into the close here. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow right now is up 8. NASDAQ is up 12. S&Ps are flat. We're going to be right back. Folks, this is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's see this Believe card. This is by Barbara Kingsolver. Hope is a renewable option. If you run out of it at the end of the day, you get to start all over again in the morning. No doubt. Market-wise, let's take a look at it out here. We had the Dow Industrials down 3, NASDAQ up 8, S&P's off $1.50. Gold contract flat at $1,214. Silver down 15 cents at $17.10. Platinum down 15 at $1,268 an ounce. Copper $3 a pound. Light sweet crude up 59 cents after hitting 88 at 91.32. Bonds, the 10-year down 7 ticks. 30-year off 20 ticks. Both of those 10 and 30-year folks actually went higher with volume. Bonds want a lot higher price. King dollar pulls back at 341 ticks. I suspect King dollar is going to finally take a rest. We're at 87.73. That can pull back to about 84.50. Pretty easy. You had the volume come in on the downside out here. Euro up 44 ticks at 126.26. 126.66 rather. The yen down 48, trading out at 104.41. Our phone number is 877-927-6648. Give Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. Cash S&P, we get to 1926. Guess what? Close at 1947, so it's 21 points off the low. But guess what? We can have juice down here, folks. You're coming into the swing point of August. The top of that swing point was the 1942 area, and you're coming down with heavier volume. We go look at the SPY. If you want to look at this correlation, and you can set it up the correlation on your screen, what you have is this. We got 1 day left in trading. The SPY has a nice little doji, and these dojis are a trip in the middle of moves, folks, okay? They like to mark the halfway move. That's on the daily. On the weekly, what you have is that thus far we're already at 550 million shares, and you're going into 592 million, and today we did 153 million. This is going to basically slice and dice this swing point out here at 190.55. What we've also done in the SPY, and this is a big heads up, now watch this. What we've done in the SPY is that we have broken the trend with conviction. And the trend I'm talking about, you talk about going back far. This is I mean, it doesn't mean you can't get back into it, but when you break something with conviction, man, this is pretty intense. And the trend that we broke goes all the way back to 1340. 1340 S&P we're talking. We're at 1940, up 1940 right now. And it broke it. Hey, we'll see how this shakes out. But this little baby not only broke it with conviction, it would have to get back inside almost 197 on a weekly basis. Got some action downtown. Dow Industrials. We take a look at the Dow Industrials. What do you have with the Dow Industrials? Flat market out here. Have volume in the market. We did a 700 and I think we did 782. Let's go look at this. What we are going to have out here now, folks, is that we're going to have a high volume week also. We did 799, so we're going to do like 800 million. We did 865 million. Yesterday, 943 the day before. NASDAQ Composite. We go take a look at the composite. We have with the composite got to 4367. That also went to the highs and the lows. Had the juice behind it, meaning had the volume behind it. The NDX 100, the 3 Qs, flat market out here today. High volume on the way down. A weekly basis, what you have is this. The 3 Qs thus far is done 180 million, 187, and you're going to 191. This is pretty intense here. So check this out. The 3 Qs for the week, and we got to a low of 95, 97. The high of the swing point is 95.69. So we haven't made it down to the swing yet. We missed it by 40 cents. Wicked expansion of volume, though. Big one, too. You know, so I expect what you're going to see. You're going to see the Qs go after this swing low as the S&Ps are also going after the swing low. The small caps. Let's go take a look at the small caps. What we have with the IWM is that the IWM is right into the swing. The last 2 swings, actually. The IWM, let me put this on. I'm going to put this on a weekly basis to get a little bit more clarity. So the IWM closed up 101 at 108.83. We went to 106. The 106 area was busting the swing point from May, which is 107.44. Volume there was 320 million. We've done 243. So if we did what we did today, it would have 320. That is still going into 315. So what you can see is this. The small caps continue to build cause to break down. You know, it's still a consolidation, meaning when you get up to the highs, it gives it up. It gives it up at 120, has expansion of volume on the way down. So what that is doing, that is building cause to break the lower price. And we'll see how this baby trades tomorrow because thus far the identification is pretty clear that this thing wants to break and break downtown. Dow Industrials. We take a look at the Dow. The Dow had a flat market out here today. The way that that little baby's set up, she's at 16,801. I expect she's just going to make a run for this 16,333. You know, we're coming into a Friday, maybe get a small dead cat bounce, have light volume. Intraday today, try to make it all the way back. Couldn't handle it. Gold contract. What do you have with gold? What we had with gold is this. Gold basically did 142,000 contracts. You got to a price point of 1224. Couldn't hold the price point. I like how it's set up here. That's the bottom line. Silver, I don't like what's happening with silver. Silver busted out its lows, had juice behind the move. That's problematic in itself, just when you take that all of the above. Oil is going to be interesting because what oil did is that oil rejected lower price, had high volume, though. Oil's been getting smoked. I expect what you're going to see with oil, it's going to get some kind of a dead cat bounce out here. And, it can be a decent one, too, because oil traded down to 88.18, rejected that lower price, inside the range. Looks like it's complex ABC structure on the way down. The 85 price point is still game in oil. And a confirmation of that would be that it does actually go higher tomorrow. And as it goes higher tomorrow, the volume lightens up. That's what you'd be looking for. Now, let's go over to Apple, because Apple is still keeping the NASDAQ up, even though the NASDAQ got smoked. Apple today, guess what? It's at 99.90, and it looks like coming into Friday, it's going to close over that magic 100.72 number again. So that would be the 7th week in a row that it closed over that number. Now, Europe. We're going to go to Europe early today, and this is why, folks. Europe today had some destruction in it. Well, first, let's go to Asia. Asia last night had some heavy destruction. You had the Nikkei down 2.6. You had the Taiwan off 2.8. Nikkei last night not only came down with some real juice, and it basically gapped away. Well, that could be a currency gap. There she goes. Okay, so comes down with real juice. The Nikkei last night did 1.7 billion. So the Nikkei is at 15,600, and it's set up to get out as 14,700. That's a big number. In the UK, FTSE, wide price spread, accelerated volume. Now check this out. The FTSE blew out its bottoms, folks, okay? Now, this has been in a consolidation for over 6 months. It took out those bottoms like paper, okay? We're down 111 bucks. We're at 6,400. The FTSE is going right down to the we're at 64.46. Next stop is 64.16. So let me see this. I'll put this on a weekly. You blow that away. Yeah, oh, this is intense. Yeah, okay, so check this out. FTSE's going to 6,000. So the FTSE, you talk about distribution, the FTSE has been at these highs in the same trading area since March of 2013. Long time. Long time. And she's rolling. She's rolling over, and she's rolling over with volume. Yeah, no doubt about it. DAX in Germany, that got toasted and roasted also. DAX in Germany out here today was off 186. We're at 9195. And that's making its way down to the 89 area. Remember, the DAX in Germany, folks, have already got to 3 separate lower lows. This is Tom O'Brien, this is TFNN. You stay right there, folks. We're coming right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Some of the high-volume stocks out here. You had Fannie Mae down 19 cents. Freddie Mac off 17. Both of those are in tough shape right now. It's going to be interesting to see how this whole thing plays out. So if we bring up Fannie Mae first. Fannie Mae is trading at $1.50. They tell you it's worth nothing. You gap away downtown. We put this on a monthly basis. Let me just put this on a 5-year monthly. Man, this is intense. This is just crazy how this works. So we know that equities, all trading vehicles, folks, basically, you know, they break out, they go topside, they like coming back out to their signs of strength. This, you know, started at 27 cents. That was in March of 2012. It was going sideways, you know, basically worth nothing the whole time, right? Then what ended up happening is that a couple hedge funds decided that they think, and they still do, and they very well may be right. We'll see where this shakes out. I don't expect they're going to be, but this is, you know, this is what makes a market. That they would bring the government to court to basically try to change the aspect of how Fannie Mae and Freddie Mac would operate, meaning that the way it's operated right now is that all the profits that they have are going back to the government because they bailed them out, and they want to basically they want to fund them again. They have to figure out some way who's going to buy all the mortgages, but that's the situation at this point. Make a long story short, a couple hedge funds got in it. They decided that, okay, we're going to go after the government, and we think we have a shot in order to bring these companies back to how they were, or maybe smaller than they were, but at least bring them back. That would be, that trade is a political trade, because that trade would be, you know, paying enough congressmen and senators off to turn around and say, hey, listen, we need these. They're making money right now. Let's change this and let's have the equity going. Well, bottom line, stocks go from 22 cents all the way up to $6.35. Last time we had any volume was the third month into this operation, which was May of 2013. Now what you've done is that you've gapped down, and the way this is set up, you know, the next stop is 80 cents. You're at $1.50, next stop is 80. It breaks 80, next stop is 22 cents again. So it's pretty intense. Now that's Fannie Mae. Let's go to Freddie Mac. I suspect that's going to be set up the same way. Freddie Mac is trading at 148. And we bring this back. Yeah, it's set up the same way. Pretty intense. So that's set up. It's pretty wild that they are both the same price. Yeah, 28 cents is for both of them. So big numbers, big numbers. I guess on the other side of that is that the funds themselves probably have already made money on it or don't have a lot of exposure. The reason being is that when I actually look at this, so if you're going to do a trade like this, so watch this for a second, because if you're actually knew and mapped out what the risks were versus the rewards were, and you're buying the stocks at 20 cents, 25 cents, thinking that, okay, I'm going to go after this, and you're hoping you're going to get some kind of a pop, well, they got plenty of a pop to make a fortune, to sell some of the shares, and basically ride on the profits. You know, if we look this up, Pershing Square has a 2% position. This is pretty, oh, this is wild. So this other guy that has a three-tenths of a position, which is 20 million shares, Fairholm, he just bought another 1.4 million in June. BlackRock sold 145,000. Let me see who the buyers and sellers are. Let's see who's smart. Well, you have a few of them. You had Siemens Capital sold 785,000 shares. That was about the biggest one. There's a great question in the den right now. It says, why does someone have to buy the mortgages? Okay, so check this out, folks. This is how this whole business works. And someone does have to buy the mortgages, okay? And I will walk you through this because this is really good to know how this mortgage market works. So picture that when you, well, here, let me give you the history of mortgages. That'll be easier so you can really understand the whole deal. If we go back to the 70s, right? What you had then, 70s, 80s, let's start in 80. It started in 80, 84, 85, Fannie Mae, Freddie Mac. But okay, so if we go to the 70s or 80s, the way you get a mortgage is you go to your local bank, and we all had local banks at that point. You would mostly, you know, put 10% down, 20% down. You always had to have something down. There were, you know, you had something down. The bank would give you, there was savings and loans then. The bank would give you the rest of the money. You pay the mortgage off. That was the way that banks had made money. Local banks, they knew the mortgage market, they knew the real estate market. That's how they made money. I believe it was like maybe, I'm not sure if it was 80, 81, 82, somewhere around there, Fannie Mae and Freddie Mac came into existence. And what that was about was that they would package the mortgage, sell the mortgage into the market as a security. Now, what makes that really cool is this, is that mortgage companies themselves, they never had mortgage companies till about until this started. And if you started a mortgage company at that time, you made money hand over fist and sold it to the banks, because the banks didn't even realize what the heck was going on for a few years. because the mortgage companies themselves would just make a deal with Fannie Mae and Freddie Mac, and they would be called a wholesaler. So they would wholesale the loans. They would know, let's say if you and I came to a mortgage broker, because this is how it works right now. You come to a mortgage broker. The broker turns around and says, okay, we need this, this, and this. Here's the percentage rate. When this first started, you always had points. So a point would be, if it's a 1 point, it was a $100,000 mortgage, you pay $1,000. 2 points, $2,000, okay? And 2 points was normal at that point. 1.5, 2 points was normal in the 80s. Fast forward to now, what you have is that the mortgage brokers, when they are funding a mortgage, it's immediately sold to Fannie Mae and Freddie Mac. If you really want to wrap your head around this is pretty cool, because my head's wrapped around this in a big way because we have the fun. You can go to the Fannie Mae and Freddie Mac site, and you can see exactly how this works, meaning that this is done on electronic basis, that you could be buying mortgages if you're the broker. First you have to get licensed by them, but well, I don't know if license wouldn't be the right thing. You get licensed by the states, but then you'd go into them and say, okay, I want to do business with you. Once that is established, you go on the site, you can basically fill in, say what you have. They will tell you right there and then every morning what they're going to pay for that. You stay right there because we'll walk you through it. Because I'm sure you've seen these loans at Quicken Loans, okay? And all the mortgage brokers are doing it right now. And what it is that they can almost tell you whether you can get that loan within like the first 24 hours, which is really cool. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we had the Dow Industrials finished down 3, Nasdaq up 8, S&P's off 2.5. We're talking about the Fannie Mae, Freddie Mac, and we're talking about the mortgage market in particular. So when you see these ads for Quicken Loans, and most good mortgage brokers work this way now, folks. And what it is that they can tell you with about 24 hours if, in fact, you are going to get the mortgage for what you're looking for. And these are the caveats that are inside it. What will end up happening is that, yes, you have to make sure the house appraises out. So that's one of the biggest ones. And they're getting these numbers, by the way, they're off the same Fannie Mae, Freddie Mac site. That's how this thing, it's all electronic now, and that's how this thing works. So inside of that, you know very quickly whether you can get a mortgage or not get a mortgage. But listen to this. This is a caveat for all you folks that are in business for yourself or have a Subchapter S company. And this is what it is. Inside the regulations, so let's picture that you have a Subchapter S and you are a W-2 employee also, okay? And that happens with plenty of folks, okay? You're getting a paycheck from some company. You might own a couple companies. You get a paycheck from them, then you get a Subchapter S. Inside the rules, and this is, I suspect this changed from the downdraft of 2008. Let's picture that you make, I don't care how much you make. You make you can make $150,000 as a W-2 employee, right? If your Subchapter S has not made money for 2 years, and that amount of money can substantiate the loan that you're getting, guess what? You won't get the loan. That's a trip. Now check this out, because this is bizarre in the context that the IRS wants you to take payroll out of the Subchapter S. Okay, that is the biggest barrier that I've seen when we're moving some of these properties out. You know, and it's really interesting. I thought that one was one of the most interesting ones. The reason being is that divergence inside there. And so what ends up happening is that, bottom line, if you only have a subchapter S, you're in good shape, because what ends up happening there is that if you're making a profit, of course, that profit comes to your bottom line and you're all set. If you are using the subchapter S and then you have a W-2 simultaneously, well, guess what? You want to keep that in mind, because that is one of the biggest caveats that are inside that. If you're just a straight W-2 employee, regardless of what you heard out here, that mortgages are hard to get, they're very easy to get. They're simple, they're quick, they're all of the above. There's no doubt about it. And it has to do with the amount of, for working yourself. That's what it really has to do with. 877-927-6648. When we talk housing, let's go look at a few, let's look at Lanark. Lanark right now, so they're in the single-family housing business, multi-level business, multi-level apartments also. The low is 32, the high is 44. This is trading at 39.01. We put this on a 5-year monthly, and you know, you get a consolidation that's in place here. It's not backing off each and every time. It's come down to this high volume price point of about 37. It's rejecting it. You know, yeah, that's not bad. The last time it was up at this 44, it had some juice. Home Depot, let's go take a look at Home Depot out here. HD was up $1.22 today. It's trading at 92.24. Just wants to break topside again. This got some juice. This got some. Oh, this is a big ABC up anyway. So yeah, this is when this broke topside, even on the weeklies, on the monthlies. This went with volume. Yeah, no doubt. And it's a monster too. So your A point on this is 28. Your B point is 82. 28, 82, 54. You got $1.24. Huge, $1.24. If we go take a look at the ITB, this is the iShares U.S. Home Construction ETF. That is trading out at 22.47. And, oh yeah, look at this. This is going to be interesting. Okay, so what this did today, this got into the last swing low, 5.9 million, 4.3, rejected that lower price. Whoops. We put this on a weekly first. She looks good in the weekly. We put this on a monthly. Yeah, this is strong. This is interesting. So let's see what's inside this. This might be the carpet companies and everything. See what we have inside this thing. Okay, so so you get Lennar, D.H. Horton, Pluti, Toll Brothers, NVR, Home Depot, Lowe's, Pointy Homes, the Ryland Group, and Sherwin-Williams. What is Sherwin-Williams? I want to see. We buy so much paint off Sherwin-Williams, and it's good. It's good paint. And what does happen is you use less paint when you're using good paint, but it's expensive paint. There's no doubt about it. Yeah, I mean the housing business, folks, continues to go higher. That's the bottom line. You know, it also depends on where you are. You know, because there's no doubt. I mean, Boston's going through the roof right now. New York's going through the roof. I'm not sure. Well, California's going through the roof. Now, I think, well, I know Boston. In Boston, in particular, what you have is that the price of real estate does not substantiate the rents anymore. Which is, you know, when that happens, then you get into prices that can implode. Meaning, once you get over what rents will pay for the mortgage, guess what? You're in trouble land. You know, we'll see how much further it goes before it takes that dip. What you may see happen in those high-priced areas is what happened in about 90. No, yeah, it was 91. And what happened there is that you had an implosion, but that wasn't a straight-out implosion across the United States. The one in 2007 was the first one since really the Depression that was right across all states all times, just about. So we go take a look at the XLF, the financials out here. What you have with the financials? Financials today got down to 22.74. Had volume. Right now, it's up 6 cents. But what you're going to have out here is that you're going to have this also coming into a swing point with volume expanded. We've done 179 million shares, and it's coming into 194. That means that you're actually going to have higher volume coming into that area. Why? Because this averages a good 40, 50,000 shares a day. Yeah, we did 56,000 today, 51 yesterday, 33 and 38 the 2 prior days. The XLE, the energy, you know what's intriguing here? Energy actually has led this whole baby down. The XLE today blasted out its October 11th low. That low was out there at the $88 mark, and we did a monster volume, 29 million shares. We take a look at this on a weekly basis, and what you're going to see is that your benchmark, that February 5th benchmark, the top of that benchmark is 84.17. The volume is 98 million. We've already done 85 million. So this is really important in the context that the S&P benchmark is still 200 points lower, folks. The XLE is here. It's right, basically was 4 points away from it today. 4 points away from it. The volume is even heavier. And when you come into a swing and your volume's even heavier, your probability, well, we'll see how it actually hits it. It hasn't hit it yet. It has to hit it first, which is that 84.17 mark. Because, you know, when it does blow out before it, you know, we'll see how it hits it. But right now, this is coming in. It's coming in fast and furious. So that is looking that it's not only going to get down to that level, but it wants to break that level. You know, we go take a look at Amazon. What do you have with Amazon out here? She rejected lower price. She's hanging in there pretty well, actually. You know, Google. Google hung in there, too. So, you know, you have a couple of these that are hanging in here. The IBB is the number inside the NASDAQ. And the IBB hasn't broke down yet. You know, and that, folks, was with the NASDAQ being down a huge amount yesterday. It still hasn't broken down. What we will have this week is that you'll have a high volume low pushing into the low that was established the week of the 19th. That's what we're going to have. Thus far, we have 5.7 million shares, and that was only going into 5 million shares. So we're going to have that, but it's going to take a lot more juice for that baby to break down. This is Tom O'Brien. This is TFNN. You stay right there, folks. You're going to be coming right back. Dow Industrials finished down 3. NASDAQ up 8. S&P's down 2. We're going to be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. We had the Dow finish down 3, NASDAQ up 8, S&Ps were flat out here. And if we do go over to Asia, folks, and we go with the Nikkei first, Nikkei last night had a tough night. Baby was down almost 3%. He had volume behind the move, down $420. I expect what you're going to see out here is that she's going to get more pressure tonight, somewhere down around... she'll be down another couple $100. You get a swing point at this 15,300. The bigger issue is the 14,700. That little baby wants to get into that. China won't be open. Shanghai won't be open, folks, until Monday. That if we go to the Hang Seng, what you will see, I expect, she was down 295 bucks. But what you're going to see when that baby opens, and this is always wild how this shakes out, she'll probably open down quite a bit Sunday night. And a lot of that's going to have to do with also how we trade out here tomorrow. The European markets, they, bottom line, went south today. I expect you're going to see them go a lot more south tomorrow. They were down, Spain was down almost 4%, 3.92%. And if you want to see those bond yields again, which is pretty wild, the yields in general, they keep going down. So the bond market itself wants to go dramatically higher. Yields would go dramatically lower. If we take a look at the TLT, if you want to see that correlation inside the 20-year plus TLT bond fund, it's at 117.20. Yesterday, you go into a gap with 17 million shares. The high of this last 6 months is 119.43. We put this on a weekly basis. What you're going to see is that it's building cause to get into this 119. Now, that level, it looks like it's really setting up an ABC structure on the way up. And if that's what we're doing inside this 20-year, it is a big one. So watch this number. You're talking about 101 to 119, so you got 18 bucks, which would give you, and 112 is the C point. So, we're talking 130. And we bring this back, you're going to bring it back 3 years, and your high thus far in the TLT is 132.21. Okay, so watch how this shakes out, folks. The first high in the bond market is 2012. It was March of 2012? No, July of 2012. So from July of 2012, we back down, rates go up. We've now gone up on price since December of 2013. The next move here looks like it wants to take it to the highs, the 132. It can be a test to the highs, and, that's the low of the rate structure again. That's one scenario. A second scenario is that you just bust over that high and rates get even lower, which would be just a total mind blower. There's no doubt about that. But guess what? It's on the table, The way that the TLT had traded, and this is a classic, too, which is just amazing. When the bond market really started accelerating, it was in August of 2011. It just took off. The bottom of that was 97 in the TLT. And just as the bonds themselves, the TLT never came back to that area to test it. It went to 101. It did on a monthly with 146 million shares versus 489 million. That's your indication that you break higher, you have wide price spread accelerated volume. You pull all the way back down, you pull back with lighter volume, rejects lower price, goes forward again. So what is the next move? The next move, folks, is that how do you go into these highs? Last month, we did 177 million shares. Well, if it goes into it with 177 million shares, guess what? It can blow it away. The high right now is only 131 million. The month before, though, you had 223. So you really got to use 223. That would be the number I'd be using. You know why? Because the state conservative with these characteristics, the volume characteristics, if you're right next to a bar, even with a monthly, and the volume differential is that much, you want to see it break it with higher volume than the highest bar. That's how that shakes out. That the retracement itself, how we went from highs to the lows, and when you bring this back on a much longer term basis, what we did is we did a 0.618 retracement. Now, when you do a 0.618 retracement, most times all you do is actually make it to the high. So if you're setting up either buying real estate, if you're refinancing your house, guess what? Set it up right now. It's amazing, folks. Right when I was just telling the story, this is a mind blower about the mortgages. It just came across the tape that Ben Bernanke, listen to this. This is amazing. This blows my mind, actually. Ben Bernanke was just in a conference in Chicago, and he was explaining that he thinks the mortgage regulations are way too tight right now. And he said to the audience that he just tried to refinance his house and he couldn't. I'd love to know why that is the case. That is absolutely amazing. And you know what's really going to be wild? It's going to be wild if he couldn't refinance that house for the exact reason I just brought up. Because if he's working under a subchapter S, and hey, who knows? I don't know, but that one blows my mind because I can't picture. Hey, let's see, he's been out of the job. Yeah, he's been out of the job definitely long enough right now that he doesn't get a paycheck. So if he doesn't get the paycheck and he's working under subchapter S and he's sucking the money out in a different way, I'm sure there's going to be a news tomorrow. It's going to be in the news tomorrow. He said, why couldn't Ben Bernanke, refinance his house? And he said to the audience that evidently the audience was laughing. And he said to the audience what the quote was. He says, "I'm not kidding. I just couldn't refinance the house." So. Yeah, he's unemployed. I mean, that's what Terry's saying. Exactly. Which is just think about the difference. Think about the difference from now to 6 years ago, right? That's so bizarre. It's unbelievable, and that is a bummer. There's no doubt about it. There's got to be a middle road here somewhere. That whether you have the assets or you. Who knows? That one is so far out, it's unbelievable. Listen, folks, you just stay right there because our man, Mr. Andy Heck's going to be coming up next with you. He's going to be growling a problem with you. And don't forget, if you happen to be in the NADEX trading contest, we're giving away $10,000 this week in cash. If you're in that contest, make sure you trade each and every day because each and every day we have 5 separate winners. And if you haven't seen that leader box yet, get over there, man. We got some big numbers, folks, okay? When you take a look at right on the front page of that leader box, this is what the leaderboard is laying out right now. The leaderboard, the top one, everyone's in a profit. Top profit right now is $40,000 in 3 days. You stay right there, folks. Man, Andy Heck's coming right up next. Have a great one. Have a safe one. Look forward to speaking right here tomorrow. Go get him, folks.